Good morning, everyone. Thank you very much for joining us today. I'm Thomas Hale. I'm the Shanghai correspondent at the Financial Times. And today we're going to be discussing opportunities that thematic investing can offer to clients. To discuss this, I'm delighted to be joined by Julie Koo, a managing director at Citi Private Bank, Diana Robinson, who is head of investments and advice for Asia at JP Morgan Private Bank, and Jay Jacobs, who's head of research and strategy at Global X. So thank you all very much for joining us today. Julie, I just wanted to begin with you and just ask what thematic investing means exactly at Citi and how it helps your clients.
Thank you, and good morning to everyone. I'm delighted to be part of this panel. I think that's a really good question. I think that's a good starting place because I think defining what thematic investing means is really important because I know that there are a lot of misconceptions perhaps out in the market. For us, thematic investing aims to identify macro level trends. And for us at Citi Private Bank, that's really done by our CIO office. And then it's about uncovering investment opportunities that we feel will benefit from those trends over time. And, oftentimes I think people do confuse it still with sector investing. And I think it's easy to think of why that may be, because I think the evolution really came from that. But with thematic investing, it tends to focus on building investment exposures for investors that cross over multi-sectors and also give you the ability to package these things again, around some of these big themes out in the market. We at Citi Private Bank believe very much in thematic investing. In fact, that's the way we think about building global portfolios for our clients. There's a whole part, lots of parts of the world that we just don't feel is well positioned to deliver growth. And so why invest in it? And so at Citi Private Bank, we call thematic investing unstoppable trends. And we see these as long-term secular growth themes that really present multi-decade growth opportunities for investors. And some of these themes are under very big categories or buckets called like digitization, longevity, rise of Asia, where we think about the growing middle class and the impact that that'll bring and the opportunities. But also, maybe slightly newer topics like energy transition and sustainability. And I know there's a session to talk about that deeply after this. And so within these big categories, we really look to work with managers as well as our capital markets team to identify a diversified basket of opportunities we feel will give our clients the best opportunity to participate in these themes in the medium to long term.
Thanks very much for that, Julie. Diana, just on that point of a theme or a trend or a mega trend, how would you go about identifying something that is or is not a theme?
So just really, again, good morning, everybody, and thank you for spending time with us today. It's really picking up on what Julie has said in terms of the importance of themes. At JP Morgan, we put together a framework that we think through before launching a theme and when we think about new themes. So the first, and this really just drills down a little bit on what Julie has said. So first of all, we look for what is a large addressable market. So it needs to be an idea that's big enough. The second thing is we want to find something that's relatively early in its growth stage. So we look for something that has relatively low market penetration in terms of how that particular innovation is addressing that market. The third thing we look for is we want to see some signs that we're not too early. So in other words, some signs that the adoption is increasing so that you're not sitting there waiting for something to happen for too long. And then the third thing we think is really important because we need to invest in profitable growth. And so we look for opportunities where the economics of the industries involved are improving and the returns look like they're going to be getting better in the future. And we're not just going to see the top growth with relatively poor return on capital.
Maybe Thomas, if I can jump in, because I think Diana covered a lot of really important points. I think the other thing that I might add is, how it can be defined and how it can be measured, because sometimes I think there are themes out there, and even if there's an addressable universe, it's a little bit ambiguous in terms of how one would look at, defining that and or measuring themselves against that. And the other point that I think is important, is that point of, can it stand the test of time? Because we have seen a lot of themes, I think, come up in the past, and they were arguably probably more fads or trends, things that came and went, and everyone's forgotten about them. And so I really think that litmus test of is it investable? Is it strong enough? Is it deep enough? Is it measurable? Just like any other investment, really is important.
Thank you both for that. Jay, thank you for joining us from the US for this panel. I just wanted to ask you specifically about how ETFs fit into this topic. Obviously, ETFs are very effective ways of giving clients an exposure to a kind of international basket of assets. But is thematic investing solely an ETF phenomenon, or does it extend beyond ETFs?
Yeah, it's a great question, and I think for a lot of audience members or just kind of everyday investors, they're seeing thematic investing, and they're thinking this might be a relatively new way of approaching the investment space. And actually, thematic investing has been around for decades. The challenge has been is that doing thematic investing properly before ETFs really took a investment engine that only some of the largest institutions in the world could provide. To be able to thematically invest appropriately, you need to be researching ideas that span the entire globe, span multiple sectors. You have to be able to trade in multiple markets. And so if you go back to the 1990s or the early 2000s, really only large institutions could do that. With the rise of the ETF structure, ETFs have made thematic investing much more accessible to the broader market, because a provider like Global X or whomever can go and research what are the themes that we're interested in, what are the companies that represent that theme, and then package that all in a very easy to use structure like an ETF. So ETFs have become somewhat synonymous with thematic investing, but it's actually a little bit of a misnomer. You can thematically invest through a mutual fund. There's hedge funds that thematically invest. There's venture capital funds that are basically doing very early stage thematic investing as well. So it's really not just unique to the ETF structure. I think ETFs have just really democratized access to thematic investing, just like ETFs have democratized access to all different kinds of investing, whether it's international or commodities or different strategies. Thematic is just yet another thing that ETFs have made accessible to the broader market.
Thanks for that, Jay. Yeah, I guess any investment by definition must have some theme attached to it, or must engage with some trends or principles about how the world is changing. At Global X, how do you specifically go about defining a theme? Do you? I mean, Diana and Julie mentioned some kind of frameworks they have on their side. Do you have a framework that lays it all out?
Absolutely, and our framework really rhymes a lot with what Julie and Diana have been saying. We really look for three different things. We look for conviction behind a theme. We believe that's going to disrupt large parts of the global economy. That's really similar to what Diana was saying around looking for a large total addressable market. We do the exact same analysis. How big could this theme be? What is it going after? What is it disrupting? Is it an existing industry? Is it a new industry? We're really trying to scope out the potential for the theme. The second thing we look at is how investable is it? So a lot of themes that we're interested in actually don't kind of get off the cutting room floor because they're not investable. Either there's just not really a broad enough opportunity set of publicly traded companies that give exposure to that theme, or the theme kind of has almost too much breadth. There's too many companies that are involved in it, such that it kind of loses the power of the theme itself. If you said, I want to invest in the theme of the internet today, what does that really mean from a thematic perspective? It's a huge total addressable market, but there's thousands of companies that are now involved in the internet in one way or another. So it's too broad. But the third thing we look at is also time horizon. And that's maybe more specific to a passive ETF approach, which is that if we're going to design an ETF and bring it out to market and talk about it with clients, we can't really have that theme be something that's going to end in 6 months or 12 months or even 18 months because it really bad trade. And for most investors who want to be, long-term thematic investors, they don't want to be really trying to time those trades. They want to long-term and buy and hold that position for many, many years. So when we look at themes, we're really looking 5-10 years out for the longevity of the theme. And when we look at those three different things, conviction, investability, and time horizon, that's where we landed the 32 themes that we're offering today at Global X.
Wonderful, thank you. Julie, could you just go over a little bit in terms of the examples of themes that you are currently working with your clients on?
Sure. So as I mentioned, we kind of label them unstoppable trends, and again, it does have to pass those tests that Diana and Jay also mentioned. And so for us, we've really centered around 5 large themes: digitization, longevity, rise of Asia, energy transition, and sustainability. We do feel that we're sort of at evolving or early stage developments in each of these areas. So again, giving us that ability to think, about that 5-10 multi-decade opportunity set. But what I will say is within these big themes, and we've been talking about them for many years at that big, theme level, but underneath that, we have seen evolutions of sort of sub-themes emerge and become more investable and more interesting. So within digitization, of course, at the beginning, we were following, the Internet of Things and everything becoming digital and connected. Whereas in the more current environment, we're focusing on things that we see that haven't been yet fully invested in by our clients, including data management, data storage, data security, data protection. Just to give a few examples, within longevity, where we've been more focused on maybe the macro dynamics that we're going to drive, the healthcare sector with government and private spending increasingly going towards that. A sub-theme that's emerged for us is that tech intersection, in healthcare that's driving medical technology, more use of robotics and AI, and medical service delivery. In Rise of Asia, similarly, while we were focused last year, let's say, on more this transition to a G2 type environment where China and US were competing, I think our focus is slightly changed to think about this, common prosperity and some of the policy announcements that have come from the China government looking at this energy commitment that they've made to net zero, but also the middle class and more of that consumer spending being focused onshore, where quality of goods and standards have come up, and we're seeing a lot more reliance on what's developing on the onshore market in China. I won't talk too much about energy, but clearly that's a theme that we can't hide from or ignore. That and sustainability seem to be in almost every discussion that I'm asked to participate in, or every media that one reads. So clearly important topics, and we're really trying to pick through that to see what maybe hasn't been fully considered or realized yet, and putting a slight more emphasis. So I'd say the big level themes haven't changed for us, and I don't think they should be. If you're changing your big themes every quarter, they're probably not themes. But underneath that, I think we're really working with our partners, internal, external, to try and identify some of these sub-themes that we feel have credibility and substance that our investors probably haven't stopped to think about deeply yet.
Thanks for that, Julie. So we've talked a little bit about how to identify themes, and I guess some of them are very commonly discussed topics that everyone's talking about. But when it comes down to figuring out if a theme is an attractive investment or not, Diana, how would you go about assessing that?
So I've been thinking, listening to what Julie and Jay have been saying, agreeing that, so we have these big mega trends, but then how do you actually drill down into finding, like, how would you express them in a portfolio? And so I thought maybe one of the things I could do is just share one of the original thematic investment solutions that we offered to our clients at JP Morgan, and how the genesis of that, just to give you an idea of how we think about you actually coming up with an idea that fits into one of these mega trend themes, but then what does it actually look like when you invest in it? So along the sort of train of megatrend of sustainability as well as digitization, we began to hear from our capital markets partners a lot of interest in battery technology and how batteries were getting cheaper, and electric vehicles were going to become a much bigger trend. And this was back in like 2017. When you think about total addressable market, I remember seeing a picture in the turn of the century in 1900s where there was a picture of New York City, and it had all the vehicles were being horse-drawn at that point. And then literally 10 years later, everything had become the automobile. And with the idea that the same thing could happen in terms of changing over from carbon to electric vehicles. So you might say, well, is that a theme or is that like a sector? Because one of the things I think Julie mentioned, which we totally agree with, is that thematic investing is not sectoral investing, right? So you might say, well, I don't want to invest in a sector, which would be electric cars, electric vehicles. So we actually took a broader view of this and looked for the entire ecosystem. And this really happened because we began to speak with our third-party mutual funds partners and managers about what they were seeing, and they identified this entire ecosystem of digital sensors and all of these things that you would need to come up with these vehicles of the future. And that was really the genesis of finding a manager to invest in this vehicle proposition, so electric vehicle proposition that we've had on the platform. We introduced it at the end of 2018. And it also, when we can talk about this more later, there were at the time some ETFs that purported to do the same thing, and we can talk about why we chose one versus the other. And I think the results that we've seen from this kind of analysis is we've got a solution that's now compounded returns, like I think it's 30% over the past 3 years, and has been, from our perspective, continues to have like a good growth prospects from here.
Could I ask on that product, was that product stocks, or was that across asset classes? Because I imagine there's a lot of, for example, commodity investments you could make that relate to the electric vehicle supply chain.
Yeah, that's a really good question. We did actually just focus on equities, but sort of acknowledging your question, like a lot of the equities that we would need to purchase actually were in emerging markets and were in very small market caps. So we actually created a vehicle that has a gating factor, so you can't trade in and out of it. It's not meant to be traded that frequently. It's a monthly subscription.
Great, thank you. So it sounds like very, very high returns on that product. Jay, could I just ask you as the head of research at Global X, what does the research tell us about thematic investing? What is the evidence on how well it performs compared to other strategies out there?
Yeah, it's a great question. And it's a difficult question from a research perspective, because a lot of investing and a lot of portfolio management is really looking at data and analyzing the past and trying to extrapolate from it. If we look at 40 years of history of value stocks, how do they perform versus growth caps? How much does the size factor matter? Thematic investing, that presents a big challenge, because there's a lot of survivorship bias when you try to analyze it going backwards. If you say, let's look at some of the best, let's look at some themes from the last, several decades. What are people going to look at? They're going to look at the internet. They're going to look at the rise of the personal computer. They might look at railroads from, the turn of the century. But there's a survivorship bias if we're picking the themes that we know how they played out. It's a little bit harder to figure out the themes that people got wrong, or the companies that they got wrong. So researching long-term track record of thematic investing is a challenge. We've been looking into this at Global X. We have the benefit of some of our funds now have 11 years of history behind them. A much broader set of our funds now have at least 5 years of history. So we do have a good amount of data. What we've seen broadly within the thematic space is that it does tend to outperform the S&P 500 and the MSCI ACWI. Benchmarking is a whole other question around thematic investing, because these tend to be highly concentrated portfolios and tend to look nothing like the benchmarks that you're benchmarking them to. But regardless, we have seen, at least over the last 5 years, that a portfolio of diversified themes has that to look into is, are there other ways to select themes that have generated outperformance in the past as well? Such as, how much does valuations come into play when you're picking themes, or how much does momentum come into play when you're picking themes? And largely what we found is actually valuations have not mattered in the past. Picking actually more expensive themes, at least in the more recent history, has outperformed the cheaper themes. The market just hasn't been rewarding value very much recently. But what we've maybe more interestingly uncovered is that momentum does play a big role in driving thematic performance. So similarly, again, to Julie's point that, maybe thematic investing is kind of the next evolution of sector investing. A lot of people tend to play momentum within sectors. We're seeing that a lot of people are playing momentum within themes as well. I would not personally recommend that. We're buying themes and we're identifying themes based off of long-term structural trends that should be owned over several years, if not decades. But at least if you're looking in the short term, we have seen that momentum is a powerful factor.
That makes a lot of sense. Yeah. The question is, in terms of your relationship with your clients and your discussions with your clients, what are some of the biggest challenges that come up on the topic of thematic investing, and how do you deal with them?
Yeah, I think a number of points were already raised by Jay just before I cut out. But I think it is, there's still some challenges to thematic investing. I think it requires both the investor, whether that's the fund manager or the client buying ETFs or single line exposures, to be a little bit more sophisticated in their thinking, because I think to have sort of a concept of trying to achieve by making these thematic investments is really important, because it's endless in terms of the possibilities of what you can invest in today, because the underlying investment universes have grown more robust, and as Jay pointed out, never mind being able to find appropriate benchmarks, but being able to look at peer groups, because there really are no apples to apples that we've come across when we've met managers to talk about various themes. Diana mentioned, mobility and sort of this, EV transition that we're seeing, and we have a few funds that play on those themes on our platform, but the underlying holdings are often very different. The aspects of that story or theme that the fund managers are picking up on can be quite different. And so the end portfolio and performance can be quite different. So it does require us, from a research perspective, to spend a lot more time so that we're very clear when we're talking to our clients about what they're investing in, why we think they should be investing in it, what they should expect from that. And we really do hold our asset managers to this. And when we speak with managers and we see that there's a huge overlap to, let's say, a global tech fund we have, but it's, a thematic fund, then we tend to challenge it. Why is it necessary? If our clients can get that exposure through more of a sector fund that is more defined and widely available. So I think while our clients are interested, because they do believe, as we do, in the way that the markets are going and what opportunities coming up. We're finding it that the conversations need to be deeper in terms of helping them understand exactly what they're investing in and what they should expect.
Thank you,
I
Julie.
might add just as Julie said, I think the key is that our clients need to understand that this is a long-term investment, and they can't buy today, and then particularly some of these growth themes can have an element of momentum in them. When the momentum goes against them, they shouldn't be looking to sell out. And that comes down to the basic of client expectations and making sure that the expectation of the client is in line with what you're going to deliver to them. And given the big talk about thematic investing, it's very important that our clients can trust us, that we've kicked the tires sufficiently. And as Julie said, if you already have a fund on the platform that has a lot of overlap with the theme, is there really a need to also buy into that theme, or is that just really following into some kind of a trend? So I think it's all about having a pretty deep conversation with the client.
That's great. Actually, on that point, Diana, on the question of the conversation with the client, and the way the overall investment is managed, what's your preference in terms of passive and active management for thematic investing? I mean, presumably there's space for both approaches, but what are the benefits and disadvantages of either way of doing things?
So I can share how our due diligence department think about this. So before a fund is added onto our platform, either an ETF or an actively managed fund, they go through the same due diligence process. And the due diligence team sits separate from the investor and portfolio management and sales teams. So the things that they look at is the first thing, and this is like whether you would choose a fund or an ETF, like looking at between the two. So the first thing would probably be to think about the purity of the theme. So you need to make sure that the returns are going to be actually attributed to the growth from the theme and not influenced more by some other external factor. So really take a strong look at revenue expectations. And you can sometimes get this better in a managed fund than an ETF, because, for instance, sometimes you might see that an ETF is investing in an auto company because they have obviously a certain part of their revenue generate to the electric vehicle theme, but I'm not sure that one would say that the driver of that performance was going to be the electric vehicle theme. The second thing we try to think about is the opportunity in the theme as alpha versus beta. So in other words, how much of the theme is driven just by overall market appreciation, how much of the returns is driven by the sub-theme also just doing really well, like, so clean energy would be an example, and then how much of it might be down to stock selection, which would put you in the direction of some kind of an active manager. And then when you think about stock selection, there needs to be a sufficiently large investment universe that a stock selection makes sense. So that's another way of, when we think about whether it would be better to look at an implementation with an ETF or an active manager. Pricing is also a consideration. And whereas you might immediately think, well, clearly active management is going to be more expensive than an ETF, that actually isn't always the case. So that's another important consideration for our clients, because we strive to give them the best after cost performance. And then back to something that we've talked around a couple of times, we haven't really drilled down too much, is the idea of benchmark. That's really complicated. What is the relevant benchmark? And so we spend time thinking about what the relevant benchmarks would be for either implementation vehicle.
Maybe, Thomas, if I can, add to some of Diana's points. I do think that benchmark point is really important. And when we think about active versus passive, I think there always has to be an active element when we're talking about thematic investing, because these themes are evolving. They're not static. And I think when we thought of sort of the back in the day of buying a passive portfolio, and it was, taking a benchmark and then building a more efficient or, rebalanced exposure to something like that. This is almost entirely different, right? There needs to be a mechanism for an active thought around why this theme is relevant, and then what you're going to as part of investing in that theme. And I think those underlying inputs are changing, as I mentioned, with digitization and the new things that are coming up with things like cybersecurity and data storage, et cetera. Those weren't things that would have been part of an investment universe 10 years ago, and are really emerging only today. So I don't think for us it's a matter of passive or active in terms of the end vehicle, but really, again, understanding how that definition is being set and how it's being actively managed, the models or what have you that drive that end product or the fund management team. I think Diana raised an excellent point. If you think about benchmarks and sector classifications and things, there's going to have to be a big rehaul, I think, Don, as we move forward in the world. Is Adidas a German company? Well, it's probably still labeled as such, but if you look at their supply chain, their distribution, it looks a lot more like an emerging market company than perhaps a classic German company. And similarly, when you look at a lot of even more modern companies like Visa, is it a financial company? Is it a tech company? Is it a service provider? And so if you're playing a theme and you're trying to capitalize on some of these ideas and you're using some form of passive to take investment ideas from a benchmark or certain ways that these companies get classified, you could end up not really getting something pure to the theme.
And maybe a little bit of insight from the ETF side of things, because the majority of our ETFs are passive. We have 32 themes, 31 of them are passive, one's active. But it's a pretty stretched definition of passive, because we're spending 6 months before the ETF ever launches researching the theme, working with our index provider to develop a real definition. Start with the theme, start with robotics. What is robotics? What are the sub-themes within robotics? How do you expect that robotics could evolve over the next 3 to 5 years? And how do you kind of future-proof the index to be able to evolve to those changes that you see coming through the pipeline? How do you accurately continue to identify new companies within the robotic space as they IPO or they SPAC or they spin off? There's so much work that goes into that yes, once the ETF goes live, and yes, once the index goes live, some might still call it a passive investment, but the amount of research and development that goes into it, and frankly, just the amount of turnover and changes that will happen in that index over the next 3 to 5 years really does not resemble what a purist would call a passive investment by any stretch. So there's always, I think, Julie, you made a really good point there, there's always some element of active, depending on how you define it, there's always some element of active within thematic investing. And that's just at the ETF level. And then, of course, at the portfolio construction level, there's a lot of decisions that are getting made about what themes do I include, how do I include them, how do I scale them, how do I diversify across themes. So it's very hard, I would say, to have a true purist approach to passive investing in the thematic space.
And just to come back to you, Julie, on this, you're obviously working with mutual funds and with ETF providers to provide solutions for your clients. What does the mutual fund industry say about thematic investing? What's the movement there?
I think it's really interesting. As I said, I come from the asset management background where I spent my entire career. So and coming from the big global shops that used to manage, the options were, you had some form of geographic, global, acqui, or regional, and then you had and then evolved into more sector, and sector, and then at some form of combination between geographic and sector being available. So it's really that we're seeing a lot of these sort of traditional asset managers evolving and coming into this thematic world where maybe in the past they were managing more broad-based global portfolios or regional portfolios or maybe even sector portfolios, because I think they are understanding that what investors are trying to capture by way of investment opportunities looking forward is not going to be so neatly defined in the way that the world was looked at previously. So we're seeing a number of trends. So we're seeing managers who probably would never have done this 10, maybe 15 years ago being more inclined. And a lot of the newer products that we've seen come to market have been around these themes, next generation, focusing on what the millennials are going to spend on, all kinds of themes that are becoming more interesting. We're also seeing, as you mentioned, or someone mentioned, alternative managers, certainly private equity, venture capital have been historically focused on identifying themes and investing. But we're probably starting to see more and more of those coming to market as some of these opportunities now and the volatility in equity markets and return estimates in equity markets are where they are, that private markets is going to play a more prominent role as we look forward. We've even seen hedge funds moving in that space. So I'd say that the big trend is everyone's participating and figuring out what and how they can deliver in this space. And I don't think that's going to go away anytime soon.
And just on how this fits into, you mentioned there, Julie, your background in asset management and the way asset management evolved over recent decades was very much towards these kind of benchmarked exposures that everyone had in their 401k. You might invest in the S&P 500. You might invest in the FTSE 100. And I guess from a client perspective, it's quite hard for them to have a clear image in their mind of what they're investing in. They're just investing in the entire US stock market, or the entire global equities market, or the entire European bond market. There's no tangibility to the investment. It is a big part of this, of the theme of thematic investing, that it allows clients and investors to have a sense of what it is exactly their money is going towards, whether it's robotics, whether it's digitization, whether it's sustainability.
I think that's absolutely right, Thomas. I think, the storytelling behind it is easier for investors to understand. If you were to sit down with our clients and have a view in terms of data and how much data is being used and how everyone's upgrading, their technology, and if you were to even show them statistics, in terms of the underpenetration in certain markets with certain technologies, et cetera, that's easy, I think, and very tangible for someone to see and say, the growth is there, and I want to participate in that. I think going back to having a discussion saying, there are 5,000 stocks, in the global benchmark, and let me try and help you get excited about a portfolio that's holding 250 stocks widely spread. I think that's, I think the former is really the way that our clients seem to think about and get excited about investment opportunities. Now, I want to be clear that what we're not suggesting is, going and picking single names and single stocks. We've seen what, the dangers of that, of having concentrated positions and lack of diversification. So we still believe in thematic investing, but that it still has to be done with diversification. And we're also messaging that to clients, going and picking a one winning idea and using a trading mentality is not what thematic investing is for us.
Just to maybe pick up on one of those notes that Julie was talking about, the tangibility of themes, it certainly helps for clients to understand, but it's really helpful from a research perspective too, to experience these themes in person. You can read about, the number of cars Tesla's delivered over the last quarter, and you can see the projections for the number of electric vehicles that could be on the road by 2035. But experiencing these things in person really kind of sheds to light the state of the technology, how close it is to mass adoption, what the problems are, what the challenges and hurdles will be for further adoption. So we've made it a big point at Global X to experience these themes in real life. We call it Theme Lab, but we took a trip to an Amazon warehouse and saw the robots in action, moving, shelving around, and seeing, how human labor is interacting with robot labor to make logistics more efficient. We have many members on our team that are actively researching video games every single night. I don't know if they get paid for that kind of research, but they're happy to do it. We're sending a research member to a big mining farm in a couple of weeks to see, really what that looks like in action. A bunch of computers, in a hot room, all firing on all cylinders, trying to mine Bitcoin. But it's seeing it, it's experiencing it, it's talking to people in the space that I think is really essential to understanding these themes, so they don't just kind of come off like a really bland research report, but are really something that's happening in our everyday lives.
Jay, I just wanted to come to you on one particular point. You're tuning in from the US. The rest of us are based in Hong Kong, and of course, US financial markets have for decades set a huge number of precedents globally, from fixed income to passive investing to all kinds of other innovations. How much of this thematic investing momentum is based around the US and US institutions, and how much of it is beginning to be driven by other regions such as Asia or Europe?
It's a great question. So really, it's extremely widespread. This goes back to prior to the pandemic, but we started traveling around the world talking about thematic investing in Israel and Korea and LATAM, and it's amazing how people, no matter where they're located, are facing some of the same challenges in their portfolios. Sometimes it's how to deal with low interest rates, but on the thematic side of things, it's how to source long-term growth in a market that had pretty high valuations and still has high valuations, and where you're seeing developed markets really start to stagnate from kind of GDP level growth. So these ideas really translate globally. from kind of an investment perspective, I frankly see very little differences across regions in terms of appetite and interest in thematic investing. I think under the hood within these thematic ETFs, it's kind of interesting to see some of the differences. So technology-based themes tend to favor the United States just because technology has been so prevalent in the US for a while, although that's starting to change as you're seeing, the rise of Chinese technology stocks, other emerging market technology stocks that are becoming more and more powerful players. But it tends to be pretty theme specific. If you look at the clean energy space, a lot of these stocks are coming from China because they're huge manufacturers of solar panels. If you look at the robotics space, one of the biggest allocations in our robotics fund is to Japan because some of the biggest robotics makers in the world are Japanese. Within kind of where we see opportunities within themes as well, there's a lot of different regions that are attractive. So we have 2 US specific themes with our Millennials Fund and our US Infrastructure Development Fund, but we also have several themes that are more aligned with emerging markets, internet and e-commerce, for example, or Chinese disruption, which is happening with different technology companies, specifically within China. So this is really a global trend. It is not just the United States in terms of investment dollars or the stocks or where the themes are primarily being powered by.
Right. I think we're now going to move to a couple of questions from the audience. Perhaps I can direct the first one at Diana, given she's touched on this point a little bit. But the question is about how you would discuss the differentiation between thematic ETFs and active thematic funds when you are developing new products. So how does that kind of discussion take place in-house?
So the discussion when we talk about bringing a fund onto the platform, whether it's active, passive, ETF, mutual fund, is always driven by our due diligence team, which sits separate to the investment advisors. And that's because whilst it's very important to put on the platform solutions that will be appealing to our clients, the number one thing we look after is the fiduciary duty we have towards our clients. So we consider it a very separate function. And one of the questions I'd like to make sure that we address today that hasn't come out yet is on the risk side of thematic investing, because I think there's a lot of enthusiasm, and I think we should make sure that we do take the time to touch base on some of the risks that we see in pursuing this kind of an investment.
What are the biggest risks?
Oh, okay, sure. I'm happy to start. The others, please join in. So I guess I would say there's like 4 things I think people should be super focused on. So number one is, even though we're looking at this new way of investing thematically, old-fashioned factor analysis needs to take place. So you could find that you are buying 5 different thematic funds, but actually your exposure to interest rates is much higher than you thought, right? So some kind of just traditional factor analysis on a portfolio is extremely important. The second thing is, I think it's diversification, which we've touched on a little bit, but it might seem, if you were buying in these different things, like I think Jay just mentioned, like next gen and millennial, that you've got, and robotics, that you've got these very differentiated themes, but actually you need to actually look underneath and see what the overlap is, because you could be not very diversified, even though you think you are. So that would be the second thing to pay attention to. I think the third thing is, whenever you buy into something that's a trend, you need to make sure that you're not paying too much for it. So I think some type of, again, old-fashioned analysis on pricing and returns is also really important to pay attention to. And then the fourth thing I would say comes back to the question around discussing this with clients and expectation management. So it needs to be very clear that people are buying something that they know what they're investing in, because it's their money, it's their wealth, and they need to be comfortable with what the expectations really are. So I would highlight those as sort of the 4 risk factors I think it's really important for people to walk away with, keeping an eye on.
Thanks for that, Diana. I'm sure there's much more to say on that topic, but we're slightly short on time, and I want to get this other question in, which is on fixed income How does thematic investing apply across fixed income credit? It's a very good question because it makes the point that unlike equities, debt tends to have a capped upside, and portfolio managers are obviously much more concerned about downside risk than they are about the dramatic upside that you might associate with kind of world-changing megatrends. So how does thematic investing apply to fixed income?
Maybe I'll take a stab at it, and hopefully Jay and other Diana will jump in. I think it is considered slightly separately, and we have seen more fixed income funds, I'd say, becoming more specific or narrow to address certain things that clients are looking to get exposure, investors are looking to get exposure in. So in an environment like this, whether it's floating rates or a portfolio of fixed income that's more on senior secured loans or what have you, is it thematic? Is it sector? I think it's built on a similar view, market-driven view that the world and the way that rates are going, is headed in one direction. And I think the question that comes to mind for me, I guess, is what is that time? We said, a good theme should be able to withstand the test of time and, not be anything that's more of a tactical idea. But I have seen more fixed income funds being introduced to us that are cutting the fixed income landscape into different pies, pie slices, and moving more into that thematic area. Certainly, we've seen that on the sustainability side as well.
Great.
I can jump in. It's probably the sustainability side where you're seeing the most thematic bond issuance, right? Either green bonds or sustainable bonds.
That's right. Yeah. Very, very final question. This one for you, Jay. It asks. I think you touched on this earlier, but it asks what's the life cycle of a thematic ETF, and is thematic investing a lagging phenomenon to macro trends, and how can we decide a trend is no longer relevant and exit without losing returns?
Really good question. I have kind of a silly thing I say about this, which is that there's really three stages of a theme. It's a dream, it's a theme, or it's mainstream. When it's a dream, it's an idea that people are excited about, but you really can't invest in it, and it's not really mature enough to be considered a theme. Maybe Diana, back to your point, like you want to see some progress in a theme already before you get comfortable with it. Usually a theme that's not really had that progress yet would still be a dream. Then you enter into the theme where there's some level of progress or some level of adoption, but there's still a huge addressable market out there that is slowly being penetrated by whatever it is, cybersecurity, robotics, batteries, whatever theme you're talking. At some point, that theme will fully mature, that anyone who adopted that technology or product or whatever it is has fully played out, and it's going to start to converge with kind of general trends, whether it's GDP growth or general kind of broad market earnings growth. That's when that theme has become mainstream, and it starts to look, frankly, like just kind of an industry or sector. There's a few kind of telltale signs you can look for. If a lot of these companies start paying out dividends or doing huge amounts of buybacks or acquiring their major competitors, or GICS realigns their entire industry classification system to basically recognize that this theme is now a sector, it's probably fully played out at that point. And for a thematic investor, this is where the active management comes in. You need to know how to cycle out of that theme where the growth opportunity has largely played out, and to kind of refresh that growth in your portfolio, finding a theme that is in a relatively early stage. Ideally, to Julie's point, you're not changing themes every quarter. This is something that's going to happen over a very long time frame. And if you look back in 5 years, maybe you start to change your portfolio. But that we fully expect a lot of these themes will fully play out in our lifetime, and we'll be looking for the next themes when that happens.
Is there a particular signal people might think of when it comes to a theme having become mainstream? What is there something you might look for? Maybe showing up on the evening news or.
The change in growth rate. So if you start to see, you can look at it in sales, you can look at it in adoption, but if you start to see that growth slow down, it can still be positive growth, but if it's slowing down, that means that it's probably kind of peaking on the S-shaped adoption curve and starting to flatline. It's amazing
Great.
how resilient some themes are. You look at social media. Social media has been around for a very long time now, and it's still growing at 22% a year in revenue. These themes can be phenomenally resilient and phenomenally long-term, but there will be a point where you start to see, those growth rates really come down and converge with the broader market.
Thank you very much, Jay. Sorry, we were essentially out of time on the theme of timing. But thank you all so much for your time this morning or this evening, depending on where you're based. And thank you all in the audience for joining us and for your very thoughtful questions. And enjoy the rest of your day. Thank you.
Thank you.